Trading psychology tips and tricks for mastering the market. It's time to work on your trading mindset so that you can do better in the market. Now that you know the basics of trading, you need to build good habits in your mind. When you trade, these habits will help you do well. Trading psychology helps you keep a winning mindset at all times. Basically, trading psychology is everything about your personality and actions that directly or indirectly affect how you trade. So here in this video, we will focus on some major tips to help you master the market. Grab your paper and pencil if you want to note them, and subscribe to our channel now. Let's take a look at these tips and tricks. Number 10. Don't get lost in the numbers. Many people who are new to trading are ready technically but not emotionally. Things might go well at first, but many new traders don't have the emotional strength to handle a big loss. Many people act quickly and change their setups because they don't have enough experience. The problem with this is that just because they lost a trade doesn't mean that their setups are seriously flawed. Experienced traders, on the other hand, will be sure of their plans and know that things take time to develop. Trading psychology shows us that long-term growth is more important than short-term gains. Once the trader realizes it's okay to lose money in the short term, they can make better decisions. Number 9. Accept that the market will do what the market wants to do. No matter how much you plan, you can't be ready for someone on the other side of the world to make a huge trade that throws all of your plans off. The only way to deal with random moves against you by the market is to cut off all emotional ties. If you can't change what's going to happen, you can't be upset when it does. Just accept that the market will do whatever it wants, and you'll avoid stress and the urge to cut profits short or get stopped early because you think the market should do something else. Number 8. Keep a trading journal. Keeping track of your trades can aid your consistency and long-term profitability. A comprehensive trading log contains information about your trades, such as the prices at which you bought and sold, the size of your lots, and an area for comments. Don't forget to record your daily emotions for each trade. This will assist you in determining why you have lost money. After trading, you should review your trading journal to assess your performance. Your mission is to determine what went wrong and how to correct it so that you can trade more effectively. By keeping track of your trades, you can learn more about how your emotions affect your decisions. Do you also keep a journal and record your daily trading? If yes, then tell us in the comment section. Number 7. Focus on capital preservation. We just can't say this enough. To beat the market, you need to keep your capital safe. Traders who read this post will all say that they focus on keeping their money safe. Well, I beg to differ. The right way to think about trading is to focus on the losses, not the wins. Ask yourself, when you open a trade, do you focus more on the part where you win or the part where you lose? Or based on the possible loss or gain? I'll answer that question right now, and you'll see where the problem lies in general. Almost everyone thinks about how much they will make, not how much they will lose. Number 6. Embrace the risk. Tell us if this sounds like something you know. You say that losing your money is fine with you and that you always put your stop. But if your stop is far away from your entry price and the trade isn't going the way you thought it would, you move your stop up. What's next? The stop is triggered just before the market moves in the direction you expected. So it turns out that your analysis was correct, but you didn't trust your trading because you were afraid of losing money. You have to be willing to take risks and let trades play out. Number 5. Know when to cash out. No matter how well you think you know what the market will do, you must have a clear plan for getting out of a trade with a profit. Without a clear trigger, many traders will stay in, expecting that the market will move in the direction their analysis suggested. As we already said, the problem is that the market doesn't always go the way well-thought-out analysis said it would. Set up a trigger to take your profits instead of waiting for the market to give you a clear sign to get out. Number 4. Control your emotions. The other thing that trading psychology does is help you keep your emotions in check. After all, we are only human, and we can't help making bad decisions sometimes when we are afraid or want something. The key is to keep an open mind and listen to what the market tells you instead of letting your feelings cloud your judgment. This skill takes time and work, and even the best traders can sometimes get too emotional. When trading, you should remember to recognize and separate these feelings. Number 3. Don't risk money you can't afford to lose. As soon as the trader deposits dollars into the account, he or she is biased. In a sense, you believe that the money in that account will someday disappear into someone else's pockets. Capital preservation requires a concentration on losses. The proper mindset that leads to a grasp of trading psychology focuses on preventing losses from accumulating. And with time, they represent a diminishing portion of the trading account. Avoiding losses can only result in one consequence, and you'll agree with me on this point: victory. Focusing on capital preservation entails concentrating first on how not to lose, and then on how to win. Number 2. Learn from your losses. It is important to look back at your trades to figure out what went wrong. Most trades that go wrong are due to a bad analysis of the market or a lack of discipline. The first one might be easier to fix because all it might need is a better look at how the market is doing right now. On the other hand, the second one could take time to develop because it requires building better trading habits. Having a drawdown can be bad for your trading mentality. Stop trading and do something else instead. You just turn off your laptop and give yourself some time to clear your head and think. Number 1. Think like a winner. In almost every aspect of life, confidence is the key to success. You cannot succeed if you enter trades with fear when they match your criteria. Consider yourself a winner, and you will begin to think like one. If you want to advance in your career, you must understand how to trade psychology and deal with it. You can master trading psychology by considering these tips and tricks. Let us know how you like our video, and if you really enjoyed, give this video a big thumbs up. Thanks for watching. See you in the next video.